Hey guys, more people are refinancing their loans than at any time ever in history. Today we're going to jump into why that is. We're going to talk about the record low cash rates, we're going to talk about the competition among lenders, and we're also going to talk about the low fixed loans. Let's get into it. So let's go to the data. The latest ABS figures from November 2021, so a couple of months old, basically show there was $15 billion of refinancing done for that month. We compare the month to November 2020, so a year ago, we can see that there was $10 billion worth of refinancing done. So 50% of refinancing, it's a massive amount to be done. So what's the story behind that? Firstly, the all-time low for the RBA cash rate. You'd actually have to be living under a rock not to be aware of this. Our Reserve Bank, the RBA, Reserve Bank Australia, have put the cash rate down to 0.1%. This is basically unheard of. A few years ago, people would have thought that's actually impossible to do. Fast forward a few years, we have a pandemic, we have a bit of a recession, and what do you get? You get record lows. So what happens generally when people have an existing home loan is that the rates go up when the RBA puts their cash rate up. But when the RBA reduces their cash rate over time, generally what happens is the bank doesn't reduce their interest rate, the rate you get charged on your home loan, at the same pace. So what we'll generally find is we can save, a client $3,000, $4,000, $5,000 a year just because they haven't reviewed their home loan for 2, 3, 4 or 5 years. The second reason is competition among lenders. Macquarie Bank have just pipped ANZ and Westpac and are now a number 3 in Australia. This has actually forced Westpac out of the big 4 banks, which is a sign of the times. This competition is actually just forcing rates even lower. So at any one time, you've got record low rates. So right now, January, we've got variable rates under 2%, which is basically unheard of, and the rest of the market are kind of at around 2.5%. So there's an automatic savings most people can access right there. The third point to be aware of is people are locking in fixed interest rates at record levels. Fixed rates are basically an agreed rate for a period of time, usually 1 to 5 years with a lender, where the rate does not change with the RBA variable cash rate. This is becoming increasingly popular now because people fear inflation increasing, therefore their interest rates increasing and having to pay off larger amounts on their monthly home loans every day. So lately the fixed rates have been on the increase the last few months, and people are flocking to fixing to try and lock in a cheaper interest rate. Fixed rate loans may seem enticing, but they come with their own set of unique policies, and you really need to be aware of these policies before you fix your loan. The reason is that if something happens and you need to break that fixed loan, you're potentially up for large exit fees. What you should do is consult with a mortgage broker, a good mortgage broker like us here at wbell Mortgage Broker, and we can help you check to see if fixing is the best option for you, or even refinancing is the best option to you. Sometimes the best option is just to renegotiate with your existing lender, which any good mortgage broker, if you're a client with them, every year or two, they should be checking on that for you. So there you go. That's my take on refinancing loans. Hope you've enjoyed it. If you need any help with finance or home loans, please get in touch. Subscribe to the channel. Thanks.